this is Riya Singh, the currency analyst for Nirmal Bank. So let's look at the forecast for the Indian rupee. Now, the Indian rupee has sharply appreciated in the last month, testing the lows of 70 to 31 in the spot market. However, past 3 weeks is proving to be a depreciative to sideways consolidation phase. Now, strength of the rupee was more of a reflective of the dollar weakness rather than the improving domestic conditions, which has been far more sluggish owing to the strict second phase lockdown restrictions placed in the key cities of the country. The MPC meet held last week kept the rates unchanged and has continued with the accommodative stance and is to maintain the same as long as needed to restore growth on a durable basis. Now, the RBI has maintained a more tolerative tone towards the inflation, as according to the central bank, the recent surge in the inflation was due to the supply side and will only turn persistent when the demand kicks in. A strict lockdown to stem the pandemic has crippled the activity and has throttled the demand in the economy that was primarily driven by the domestic consumption. Addition to this, high taxes and rising employment has also left the consumers wary of the spending as well as the glum about the future prospects. The central bank downside revision of the GDP from 10.5% to 9.5% for the financial year 21-22 is evident of the expected growth concern and thus could dominate and could push out the policy normalization well into the year 2022. So coming to the second point, as far as the central bank's forex reserves goes, it has surged to a record more than 600 billion as the nation's central bank has mobbed the dollars flowing into the nation's borrowing stock market as well as through foreign direct investment. The reserve rose by 6.8 billion to 605 billion in the week ended June 4, which is enough to cover around 15 months of import as well as put more power at the central bank disposal to intervene in the fluctuation of rupee. The RBI will buy around 300 billion rupees of sovereign bonds and 100 billion rupees of the state debt at its June 17 government security acquisition program auction, as the government decision to dismiss the vaccine decentralization will swell its vaccination budget to around 450 billion to 550 billion rupees, as against to an estimated 100 billion to 120 billion rupees based on the earlier government statistics. Now, the FY 2020 financial year 2022 gross borrowings also could increase from 650 on top of the 12.05 trillion that was already budgeted in. And with the GST collections taking a hit for the month of May, the GSAP and OMOs might have to be propped up beyond the 6 trillion rupees to balance the ensuing supply-demand mismatch and keep the yield range bound. So all in all, the central bank will most probably intervene to maintain the elevated rupee stability in order to manage the imported inflation rising from the high global oil prices, as well as to facilitate its GSAP and OMO's operation. Also, with the import down and a continuous flow of FPI and FDI in the domestic capital market, rupee will maintain more of a consolidation to appreciative momentum on the short term, with dollar weakness aiding into the same. Thus, a wider range for the rupee momentum could be placed at around 73.75 to 72.30 levels, whereas dollar index will most probably fluctuate within 90.82 to 90.10 levels. That's all for the outlook on the Indian rupee. Stay home, stay safe. Thank you.